Good morning and welcome to the show. It is, of course, Thursday, the 29th of January. I don't really know where the month has gone, but we are live once again. I'm Chris Beecham, and I'm joined by Axel Rudolph. Morning, Axel.
Morning, Chris.
How are you?
I'm well. I'm amazed by this silver rally, but
I was going to say, so straight to my on my screen, you can see, and you've got that in, and that is not a mistake. Silver is up 67% for the month so far. That is not a typo, is it?
No. And the last time this happened, I think it was in the 1970s, wasn't it?
You said that like I was there. But neither were you, I stress. But the Hunt brothers, wasn't it, when they cornered the market? Yes, it is, of course, driven by the Fed meeting. Do you think it's driven by the Fed meeting last night?
I'm not even sure anymore. I mean, it's just a speculative bubble at the moment. The problem with bubbles is you don't know where they end. So, it could easily go towards 125. I've got some Fibonacci targets in that sort of area, $125. And then who knows how high it could go.
Who knows? It could be, nothing. So many people, I've had this conversation with them all week. This can't go any higher. It has to stop at some point. And then it just doubles. It's now doubled. It's quite mad. Sorry, I can hear myself in my ear for about 20-second delay, and it's quite. If you've never done this before, it's quite the most off-putting thing in the world. If you can hear yourself talking at a delay. So if I start making no sense whatsoever, then then I'll just keep talking. There we go. It's gone now, I think. I'm sorry. It's a very just off-putting thing to do. Let me get my charts up for this so we can find. Or have you got your chart there for silver?
I do. Let me just get it up here very quickly. Here we go, and we can see that we had on Monday a potential reversal signal because we had this big candle to the upside, the shadow here, and then we closed more or less where we opened. So if on the next day you then had a fall through that low, it could have signaled a top. That's a typical sort of toppish, potentially toppish formation. But that's the thing, it's potentially toppish. So I know some people sold into this thinking can't go any higher, and they're underwater because we're trading all-time highs. So basically, as long as you don't have the reversal signal, it keeps going higher, and that's what we're seeing.
Unless proven otherwise, essentially.
Exactly.
And then staying on the chart, it's the two things you should note, though, of course, the overbought markets tend to remain overbought.
Yes.
Don't they? It's a sign of momentum because, and I probably said this before as a bugbear of mine, that people talk about stuff being overbought and oversold as if that means it should reverse. But it's simply a sign of a strong trend. It's strength.
I mean, look at it. We've been overbought since the 22nd of January here, but if you go back towards December of last year, we had levels last seen sort of 23rd of December. And then there we had a move from around $68 all the way up to $84. So we're talking nearly another $20 higher, even though we were overbought. So we still have leeway to the upside. Yes, in December we had this 11% drop that we saw on the silver price, but that was sort of Asian speculation, and basically it was in a thin period of trading, less volume, etc., because it was between Christmas and New Year. But right now, I mean, look at it, it's just powering higher, and there's no reason for it to top out here.
And this is the classic example. When we talk about, certainly we talked about in passing until people have started trading, it's when they start using indicators. The indicator is not what you're trading. You're trading the price, and the price is telling you what you need to know. And you, of course, as a technical analyst, à l'outrance, if you like, would always say the price is the most important thing. And the sheer fact you had that 10% drop in a day, and then it just took off again, is telling you something there, isn't it? It's simply saying to you, there is enough momentum here, there is enough buying pressure to keep this one going. It doesn't want to go down. Maybe you shouldn't anthropomorphize the price. It's not a person, but it's literally telling you what's happening.
Exactly.
The momentum is there.
Yes, and that's what you should trade. You should trade the momentum. The question now is, if you aren't long silver, do you want to get long?
This is the massive question. What happens now if you're looking at this at home and you're thinking, oh, I've missed this now, I want to get in. And that's understandable because it's human nature. This is going up lots. I want to be in the thing that's going up lots. How do I get involved in it? What happens? What do you do?
Well, right now, I wouldn't touch it with a barge pole because it's just at all-time highs. And yes, you could always buy it here, but you could easily also all of a sudden get a 5 or 10% correction again. And if you're buying it now, well, the odds of this happening are greater because we've had this exponential rise than it was, a few weeks ago. Having said that, can you see here on the chart, basically at the beginning of January, we had 2 days of falling prices, a little bit, 2 red candles. So if you see something like that happening and then you see another bullish candle, those are the sort of areas where you can then say, okay, I think it's going to go to $150, so I actually go long here. Same again towards the middle of January. You had a slight retracement for 1 or 2 days, and then you just continue to the upside. So I would wait for these sort of signals if you still want to go long here, because after all, you don't know once something becomes parabolic where it ends going up.
No, exactly. And it goes on, as we were saying, I think last week, I might have said it this week as well, parabolic markets, you don't know where they end, and they don't often stop when you think they'll stop.
Exactly.
And also when they correct, they don't correct by going sideways.
I mean, they look great with hindsight, but
of course,
whilst you're in it,
of course,
ride it with relatively tight stops to the upside if you're still long.
Yeah.
And don't sell into it for sure.
Because it's not showing you any downward movement, is it really? No. You've had 1 or 2 days at most. And again, it's that if you were to buy it now up here, where would you put your stop? Where it would have to go, I don't know.
Well, I would personally, it depends on your time frame, obviously, but probably Monday's low. Why? Because we have this big shadow I just mentioned, which could have been a reversal signal. So as long as we stay above there, it's still very, very healthy. If we were to suddenly come off and fall through that one, I'd be slightly more cautious. But even then, we might get, I don't know, 10, 20% correction, and then we'd still be up, 50% for January. And who knows, we could then have another upturn. I mean, it also depends on the geopolitical situation, because this is also driven by geopolitics. The whole situation with regards to the US threatening Iran now is also pushing the gold price, and the silver price and all the other precious metal prices like copper to all-time record highs.
It's the very definition of I suppose it is the definition of speculative bubble at the moment in silver, and people will know how allergic I am to use the word bubble in stocks, but it's definitely, it's a momentum trade, isn't it now? It's trading in, people are simply trading it because it is going up so much.
Yes.
And offers the attraction there. So if you're in a market where you're trying to exploit these movements, that's definitely the way to look at it, really. So yeah, I think the phrase speculative bubble more or less applies here. But we should look at our movers on the FTSE 100 this morning. Oh, no, that's the wrong F. Sorry. There we go.
Where are they? Saga is also looking good.
Saga is moving this morning, but there we go. You should be able to see at least some of that. 3i Group, top of the list this morning. I've not seen the numbers from them this morning. No. Not surprisingly, it is once again a miners morning on the FTSE 100. Let me see if I can get all the rises in one place. There we go. Endeavour, Antofagasta, Anglo, because copper was a new record high last night, wasn't it?
Yes, correct. Yeah.
So there you go, your Chilean copper mine, Antofagasta, Anglo American, Glencore. Diageo doing well actually up there. Fresnillo, Rio, and also bringing up the rear a little bit, BP and Shell, because as you said, oil prices higher once again. So those are the news this morning. I'm not seeing, where's Lloyd's this morning? Because they, of course, have bullion numbers.
I saw it further up, but yeah, it's sort of around the 1.2% mark, Lloyd's.
Let me see if I can get it in alphabetical order then. Where's my list? This is where you discover. Oh, there we go. Lloyd's up 0.86%. So that is, that is not a speculative bubble. That is a very steady, very strong uptrend, isn't it? That's going very, very well. UK banks, star performers, and showing no signs of slowing down, which is very, very interesting. So that's amidst all the noise about silver and gold and oil and Iran, etc. Kind of unremarked that you had Lloyd's quietly pushing through 100 pence a share now for the first time since in a very, very long time. 2008. There you go. The latest of those since 2008 that's finally happened this morning off at the back of Lloyd's. So very, very strong. Let's look at NatWest by comparison. Another good run. Not showing the same kind of exuberance this morning because I think the numbers come next week.
But we can see that across a lot of banks in the UK. Bank shares have been going up since September. In the case of Lloyd's, I think about 70%, but all of them are actually doing quite well. So yes, bank shares are looking good. And as you say, everybody's so focused on commodities that they sort of tend to forget the other shares that are out there.
Yeah. 36% since September, just for Lloyds Bank, which is never known as
36. I thought it was more. Okay.
There you go. But and that's also something I think to bear in mind is that when silver's all in the news and gold's in the news, it's natural to look at those. But It's about trying to find the things that haven't moved yet in the same way.
Well, on that note, I mean, obviously we've got Exxon and Chevron reporting later this week, but the oil price, for me at least, has technically broken through some really, really key resistance. And I know I was very bearish oil at the end of last year, but I have to change my tune because we are changing the trend. And obviously it's at the moment because of geopolitical tensions, etc. But if we were to get a reversal and if the oil price were not to fall, and remember, I think JP Morgan last year said that this year the oil price could even fall towards $30 per barrel. Well, right now we are towards $65. So here, BP, Shell, Shell reporting next week. I think they have an update. So that could be a play if you missed other commodity markets, the BPs, the Shells of the world, etc. As the oil price is rising, those share prices should also perform better going forward. And you can see here, basically, we formed a sort of bottoming formation. The fact that we've now risen above the October high, which we tried to do in mid-January, as you can see here, and failed. But now that we've managed to do that, technically is telling me that we've moved out of this sideways trend we've been in since September of last year. And for the time being, again, momentum is what you need to look at. And momentum is clearly pushing higher.
It's the first time we'd closed above the 200-day moving average, which some might consider important, others might ignore, since July. Yeah. Although you'll note that the last time we did that, we had a nasty reversal, but it's still a notable event, really. I think it very swiftly reversed the last time it did that in crude oil. So we're watching this one. But yes, the strength is notable. And just to give JP Morgan their due, they said into the $30 by 2027. So they gave themselves a nice bit of time on that prediction. But it was a sense of overarching bearishness on oil towards the end of the year. And it's that kind of moment that maybe I don't think we've yet seen with crypto. I know Rich was talking about it yesterday, that when everyone's bearish on something, it's kind of not suggest that a turn is immediate, but it's maybe time just to look at it slightly in a different way. And it reminds me again of early 2016, because I've been here that long, when oil prices were having a slump and the first signs of single-digit oil price predictions, so $5, $5, $6, $7 were coming out, and that almost marked the bottom precisely of oil prices at that point. So it's interesting how sentiment can give you a bit of an indication. Everyone was bearishness. If you looked at the fund manager surveys, institutional investors were underweight energy by a huge margin, simply because it hadn't done very well. And so if something's under-owned, it starts to look cheaper. And so you get maybe inflows back into the sector, regardless of the overarching factor. And then these things tend to align, I suppose, over the course of time.
Well, that's what's happening at the moment with regards to the oil price. And also, obviously, as I just said, the geopolitical tensions that are out there also drive the oil price higher. But coming back to the cryptocurrencies you just mentioned, I mean, yes, if we look at Bitcoin on my chart here, we can clearly see that it's not doing very well, is it? I mean, it tried to retest resistance just below $100,000 in the middle of January. Since then, if you look at the chart, we have a series of lower highs and lower lows on the daily chart. That is the definition of a downtrend. And yesterday, I mean, or I think the day before, Solana hit its lows from December. Ether is looking weak. So it's not just Bitcoin. Everything here is not going as well as people would have thought, because, last year people were talking about cryptocurrencies being like gold. So
yeah, Bitcoin is digital gold. Exactly.
Well, that's clearly not the case at the moment.
No.
With gold making new all-time record
I've been
highs.
calling gold physical Bitcoin for some time now, and I'm quite pleased with that one. Because we were looking at this morning that the Google searches for digital gold seemed to peak at about the time that Bitcoin really stumbled. So again, sentiment becoming too ebullient maybe on Bitcoin, not sufficiently ebullient clearly on gold. So it's notable how that's changed. Let's look quickly at Meta, because that, of course, last night's earnings was the winner from last night's earnings, up swiftly after hours, 7% higher. There you can see on the chart, and that recovery. So finally, another lurch higher for Meta, taking it out of this miserable phase it's been in since November. Because, of course, the story of the year so far has been Mag 7 becoming essentially what people are calling the lag 7, because they've been falling behind the broader indices, particularly behind things like the small caps, because of rotation. Maybe this is now starting to shift in the direction once earnings season comes through, because, okay, Meta was good. Everyone was happy with Meta. Microsoft, not so much, because I suppose they're still chucking mud at it. But if you looked at the revenue figures, they're still very, very strong. So overall, quite a decent set of numbers, of course. Then we have Apple tonight. So this is the big one. Looking at this share price, which has certainly started to recover after declining all the way through December and January. And maybe there's some kind of a hope for a low there, should we say?
Yes, but we would have to break through a resistance line, which I can quickly draw onto my chart here. Would help if I could do it correctly. But basically, yes, I mean, if you connect the highs up from December, you've got a resistance line you get to go through. What is interesting with all of these Max 7 stocks is that they rallied this week ahead of earnings. And that tells you that investors are bullish, or they think the earnings will be better than expected, probably because of the government shutdown. Looking at analysts, basically, a lot of them were more negative than they are now, and that's changed the picture slightly. So we're actually seeing investors jumping the gun, which is not always the case here.
No, exactly. But it seems like there's some signs of hope coming through for these tech stocks. And that, again, is part of the market. It's just how things work, isn't it? Stuff that was popular before, stuff that's doing very well, falls out of favour, the share price stumbles for whatever reason, and the money moves towards other sectors. And then it moves back and forth, doesn't it? So when you're looking at these moves in the headline indices, when you're looking at the moves in individual sectors, that is often what you're seeing within a broader bull market. It's the kind of digestion, it's the kind of rotation you want to see as it continues to move higher. It doesn't often mark, oh, Apple has stumbled, therefore this means the whole market will go because Apple is such a big part of the market. It's not necessarily the case. If you've got a bull market that can survive having some of its biggest stocks doing so poorly, that in itself is quite a healthy sign, isn't it, really?
It is, because what you want to see overall is market breadth, not just a few. Because, 2 years ago we were saying, well, some people were saying, oh, everything's so concentrated in the Max 7 and it's dangerous for the market. It can't be a bull market which can last. And clearly, what we've now seen last year is rotation out of tech stocks, which is actually healthy. And that's why we've had the lag 7, then basically the Max 7 underperforming, as you just said, Chris, and the market breadth in total doing much better, with other companies taking the helm in the S&P 500 and driving stock markets to yesterday's record high above the psychological 7,000 mark.
And it just continues. Yes, 7,000, the latest big round number to disappear.
Yes.
It's in a month of big round numbers disappearing. So down not quite at 50,000, but we're not far away, I think, well,
yeah,
2 or 3% off it.
Shall we look at the losers for the FTSE?
Yes, we should quickly see what we've got
We
this
always
morning.
talk about the winners here, but obviously there are also losers.
Well, that's 14% now. There you go. Hang on.
What we can see here is
Okay.
basically Ashton. Well, that's just fund management, isn't it? Sage.
No, that's Ashmore.
Oh, you're right. It is.
Ashted.
Sorry.
Sorry, Ashted. There you go. There's the nerdiness coming to the fore. I know my stocks. The Ashted was the US equipment hire firm. So if there's, because a lot of its earnings are dominated in dollars, but it's a FTSE listed company, that is going to hurt its share price performance, because it is very much, it was in years past, as you can see, unstoppable because of how well the US did. And then since 2021, it really has struggled to regain its footing. It's entered this long consolidation period, which is fine if you've been holding the shares from 10 years previously. But obviously, if you bought into it around the peak in 2021, you're not going to be enjoying this one quite so much because it has been left behind by so many other parts. There are no ex-dividends for the FTSE 100 today. So before we start trying to blame ex-dividend movements for these falls, Sage Group having an absolutely miserable time of it, really.
Yeah.
Sort of one of the FTSE 100's only real tech stocks, but just eyeballing that, that's getting into the interesting level, isn't it?
Yes, it's approaching really, really important support.
Zoom out there and show you.
It'll be interesting to see whether we can hold there, because it's a multi-year lows that we're testing here. And if that support area holds, we could see quite a nice reversal. But obviously, if something goes down quickly, it's less likely to hold its support. But since we've got lots of different lows there going back several years, it is very likely, in the short term at least, to hold nonetheless.
So that's not a great period for Sage Group. So that's the other one, Airtel, BT. So nothing particularly dramatic. Yeah.
National Grid. So defensives also underperforming here.
Yes, which is another sign maybe that the risk appetite in the market is beginning to recover on a more broad basis. And volatility again down this morning. Sorry, it's a day for zooming in and out charts. I apologise if I give anyone motion sickness. Because we thought that was going to resume this on, what was that, Monday? And then you had a little bit of recovery the last couple of days. But low volatility is more of a common occurrence than people seem to think, isn't it, really?
Yes, I mean, most of the time you have low volatility.
Yeah. It just
What's
tends to
also
work out.
interesting here is the spike that we did see just a few days ago wasn't anywhere near the previous spikes. So fear isn't really there. And if you look at the CNN Greed and Fear Index, which can tell you if equity markets are getting to a frothy stage, that's in greed territory, but that's totally normal for a bull market. That's trading all-time record highs. So what you need to see here is for it to go into extreme greed territory, probably around the 75 to 80% area, before you can then think, oh, maybe I should look at the put-call ratios as well on the CBOE and other indicators, which could tell you from a sentiment perspective that it's gone too far. But right now, it's a totally healthy advance, and there's nothing to get us
No,
to
there's
worry
nothing
about it.
particularly to dislike about it particularly. No. I think in terms of we're looking at rotation, we're looking at the price movement. It's not. It feels certainly, obviously, the precious metals feel crazy in something ridiculous, but in indices, I mean, the Nasdaq 100 has yet to actually take out that previous record high from October. But you do have, once again, a resurgence, and it looks like a very solid performance all around. The ones not doing quite so well this morning, the DAX, European markets. That's stronger euros, not great for European exporters, of course. So that's the correlate. Well, it's good for US stocks. You think the ECB probably a bit ticked off now with this fall in the dollar, because it's going to make their life a lot harder as well. So that's one to keep an eye on. We had a couple of requests. Apologies for this one, Heckler. I've never heard of it.
I haven't either.
So we can see it's always best to do technical analysis on the fly, really. No preconceived biases. Well, there's only one thing you can say about that one.
It's still bullish, and yes, it's retracement. And you talked about silver. Where do you get back in again? Well, here, if you were to see a bullish candle, that's probably when you want to get back in again if you missed the up move here. But clearly, it's still an up move. We're approaching that support from the previous highs just a few weeks ago. And maybe that's a good area to go back in and long. I mean, when we see these sort of reversals 3 days down, people start to worry a little bit and think, oh, maybe this is the top. It may be, but in most cases it isn't going to be, because the trend's just more likely to continue than not. Yeah,
nothing goes in a straight line. But yes, it's that whole thing of, oh, I don't want to buy it now. I'll wait for it to go down. And it duly goes down and you don't buy it because you're worried it goes further. And then you look at it 2 months later and it's gone up again.
Yeah, and you say to yourself, well, I should have bought it, shouldn't I?
Yes. It's always important to have a list of the stuff you want to buy, if you can. And one more, Fever Tree, I guess, is it Fever Tree? Yeah, Fever Tree drinks. Once was the UK equivalent of a meme stock. Everyone loved Fever Tree because you were paying over the odds for expensive tonic water and the like, which I never really saw the point of personally. But has never recovered the optimism we had from many, many years ago. Not many, many years ago, but a sufficient number of years ago. So that one, it has recovered decently over the past sort of 2 months, isn't it, from the November lows?
But it really needs to take out the July-August high here, that one exactly, for it to be bullish from a medium to longer term perspective. Because, yes, we're forming these sort of saucer bottoms here, but we've had a spike higher today, the nice gap we can see here. But what we want to see now is follow through to the upside. We don't want that gap to be closed. If it is closed, it's probably just a sort of one-off again, and we might trade back towards this sideways trading range we've been in now for quite a few months, haven't we?
Yeah, absolute stellar performer once upon a time, and not quite so much since then. Good, thank you very much. That's all. Today we have jobless claims 130 as ever, the weekly numbers. Those still really haven't settled down from the government shutdown. And of course, we're now poised for a potential government shutdown from tomorrow as well over the ICE funding in the States. So keep an eye on US politics over the weekend, as if you weren't thinking of doing some fun with your weekends. And then, of course, it's Apple tonight. So that's your other big event after the bell tonight to watch out for. Thank you very much, everybody, for joining us. We'll see you again next week. Thank you, Axel.